Since 1944, the VA loan program has helped millions of service members, veterans, and military families achieve the dream of homeownership. This flexible, no down payment program was part of the original GI Bill. 7 decades later, it's in many ways more important now than it's ever been. What's also important is understanding that the government doesn't make home loans. In the case of VA loans, the Department of Veterans Affairs provides a partial guarantee. It's basically like a form of insurance for each loan. The guarantee on FHA and USDA loans is a little bit different, but the underlying idea is the same with all three of these. You're getting a government-backed loan from a mortgage lender, not a home loan directly from the government. With VA loans, the government backing gives lenders like Veterans United the ability to provide financing along with some big-time benefits, many of which can't be matched by any other lending option. So given that backdrop, let's take a closer look at VA home loans. Being able to buy with no down payment is the single biggest benefit of VA loans. Most other types of home financing out there will require one. It's typically 3.5% for FHA loans and 5% for conventional. So on a $200,000 home purchase, you're talking about needing $7,000 in cash at closing for an FHA down payment and $10,000 in cash for conventional. Needless to say, it can take years to save that kind of money. VA loans also don't come with any sort of mortgage insurance. Now, most conventional borrowers will have to pay for private mortgage insurance, or PMI, unless they can put down 20% of the purchase price. On a $200,000 home purchase, 20% is $40,000. Now, FHA and USDA loans have their own forms of mortgage insurance. It's not private mortgage insurance, it's something different. And these fees, private mortgage or mortgage on government-backed loans, across the board can add $80 to $100 or more to your payment every month. Another big benefit of VA loans is that they tend to be more flexible and forgiving than other loan types. VA lenders are typically looking for a credit score around 620, which in the grand scheme of credit scores is just considered fair credit, not good, not excellent. Now, the credit score benchmark for conventional loans is usually a bit higher, often around a 660, but you'll typically need more like a 740 to have a shot at the best rates and terms on conventional loans. Compare that to the 620 for VA. Now, VA loans also tend to be more lenient when it comes to things like a previous foreclosure or bankruptcy or short sale. Now, this one I think surprises a lot of people, interest rates, but VA loans on average actually tend to have lower interest rates than conventional loans. Now, keep in mind I'm talking about broad averages, and the kind of interest rate that you get quoted, it's always going to depend on your credit, your finances, the lenders you're talking with, and more, but there's this widespread misconception out there that VA loans cannot compete on interest rates, and it's just not the case when you look at the numbers in the big picture. Now, let's shift to talking about closing costs, which is another big consideration. Getting a home loan will involve costs and fees. There's really no way around it. But the VA actually has limits on what closing costs that lenders can charge, and there are actually fees that you as a VA buyer aren't allowed to pay. Sellers in a VA purchase transaction can pay all of a buyer's mortgage-related closing costs, all of them, and up to 4% of the purchase price in concessions. And these are things like paying your prepaid taxes and homeowners insurance, even paying off your collections and judgments at closing. Now, deciding who pays what in terms of closing costs, that's always a byproduct of negotiation with a seller. So talk with your real estate agent about how best to negotiate closing costs into your specific purchase agreement. But understand that VA loans offer some big, major benefits when it comes to closing costs. Now, VA loans also have loan limits, and these can be really incredibly confusing for people, and that's because of the phrase loan limit. It makes it sound like there's a limit to how much you can borrow. These limits don't dictate how much you can borrow. Instead, they represent more generally how much you can borrow before you need to factor in a down payment. In most parts of the country, qualified VA buyers with their full entitlement can borrow up to $417,000 before needing a down payment. And that amount, this can actually be higher in more expensive parts of the country. Now, obviously, you'd have to qualify for a loan of that size, but if you can, that's how high you can go in most parts of the country without needing to put money down. If you look to buy above this level, which you absolutely can with VA loans, veterans who want to buy above their county loan limit need to put down 25% of the difference between that limit and the ultimate purchase price. VA loans, like other government-backed loans, also have occupancy requirements. These loans are focused on helping veterans and service members get into primary residences that they'll live in full-time. Now, VA buyers typically need to occupy the home within 60 days of closing, although there are some exceptions out there. But you wouldn't be able to use a VA home loan to purchase a vacation home or a purely investment property. And last, VA loans are assumable. So that means another person can essentially take over your mortgage loan, your interest rate, and your monthly payments. This can be a big benefit if you find yourself looking to sell this home down the road. So say that you buy a house when interest rates are really low, and then a few years down the road, rates jump. Instead of getting a new loan during a time of higher interest rates, a buyer could assume your current mortgage and take advantage of that low rate that you locked into years before. Now, the VA and lenders have to approve most loan assumptions, and there can be an impact on how much VA loan entitlement you have. Loan assumptions aren't something that a lot of people do, but it is an option, and it's an option that most conventional loans don't offer. And that's a brief look at some of the benefits and challenges of VA loans.